Hello and what is going on, lovely people of the internet? It is HOOTMONEY here with another video for you guys today. Today we're going to be going over Robinhood stock, ticker symbol HOOD, Hood baby, Robin from the Hood. That's what Robinhood is most famous for. And yeah, so we're gonna be going over this one. People are calling this one the next meme stock. I don't think it's going to be the next meme stock, okay? I'll put it out there right now. Guys, if you don't remember what happened in January, Robinhood restricted selling or buying of GME, GameStop, or AMC. So, with that being said, meme stock traders do not like Robinhood, and I just really can't see retail getting behind this one entirely. I think people that are going into Robinhood, first of all, they're doing it for the fundamental play. Well, not everyone. Obviously, there are some naive Robinhood investors that are FOMOing in and causing this price to go up even more, thinking that they're missing out, which is something that is pretty common in these markets. But I don't think this is going to be a main meme stock play by any means. By any means, because I think GME and AMC are still going to be those top two kings until another meme stock comes and takes the place of those two. So with that being said, if you guys would like to join my Discord channel where we talk about stocks each and every single day, the link is in the description or in the pinned comment section. Or if you'd like to sign up for Public, where you get up to $70 in free stock just for signing up and depositing at least $1. Check out those links also in the description or in the pinned comment section. Public is basically like a Robinhood, but it's way better. They don't have any payment for order flow, and they treat you as a customer much, much better. So with that being said, let's get right into the video. Alright, my friends, so Robinhood is currently trading at around $61.62 per share. It's down 12.47% on the day, so it's having a negative day. And this is on the news that Robinhood tumbles as holders file to sell 98 million shares. So early investors in Robinhood, people who got in before the IPO, they filed to sell their shares. So as a result, the share price tumbled because that would just offload a bunch of supply of Robinhood stocks, about 100 million shares onto the market, and there's only about, I believe, 800 million shares outstanding. I think it's about 834. Don't quote me. I'll have to double check that one. But either way, that's a huge percentage. Over 10% of the outstanding shares will be flooded onto the market. So that is something that you should not really neglect as a shareholder. So that is why Robinhood is trading down on today. However, I do think there is a bit more pain for Robinhood, and we'll just go over the fundamentals real quick. We're gonna have to go look over some boring financial statements, but it will be worth it because I can explain to you guys why exactly I do think this price is a bit overvalued, and I think you guys can get this thing for around $30 per share in the future. So just bear with me. So right here we have Robinhood Markets consolidated statement of operations. We're gonna scroll up so you guys can see it more, but as you guys can see, we have revenue. So we are going to be taking a look at mainly the revenues, and we're going to be breaking down the revenue of Robinhood over the past year. So as you guys can see, in 2020, it might be a little bit small for you guys, but that is $958 million in total net revenue for Robinhood. So that's in 2020. They actually did make a lot of money in the first half of 2021 as well, and especially with that cryptocurrency boom, that was a lot of added revenue. So don't ignore the first 3 months of 2021, but we're gonna look at 2020 right now. And you also have to know that 2020 was a bit of an anomaly for Robinhood. If you're looking back at the 2019 total revenues, it was $277 million compared to $958 million in 2020. So it did experience a large amount of revenue growth with the influx of retail investors in 2020. So not every single year is going to perform like 2020, but for the sake of this video, I'm going to be measuring Robinhood based off of 2020 measures. So that could be a risk in and of itself, but we're just not going to take that risk into account for the sake of this video. And I'm going to show you guys that it is still likely overvalued at the current share price. If you want up to $70 in free stock just for signing up and depositing at least $1, Use the links below in the description or in the pinned comment section to sign up for Public. Public is a stock investing brokerage that has the cleanest and best user interface. Guys, it's better than Robinhood in my opinion, and it's just great for the newbie investor. Guys, Robinhood, if you use Robinhood right now, Robinhood is trying to get you to trade options. We're going over it in this video. They're trying to get you to trade cryptocurrencies. They're trying to make you trade and trade and trade and make all these risky investments so that Citadel and other people that they sell your order flow to makes money. Guys, Public doesn't do any of this. They don't sell your trading data. They're not profiting off of each transaction you make, so they're not going to try to make you make all these transactions. They even have a specific folder for long-term investments, so it's not easy for you guys to sell a company that you believe in for the long term, but at the same time, it has a very clean user interface. It's very good for new, young investors, so I highly recommend, if you have your money on Robinhood, consider transferring it over to Public, because in my opinion, much better for the young investor if you actually do want to build wealth over the long term rather than gamble on Robinhood. So anyways, if you want up to $70 in free stock, they're doing this promotion. You can use the link below in the description or in the pinned comment section, and all you have to do is deposit at least $1. So anyways, guys, that's my case for Public. Much better brokerage than Robinhood, and let's get right back into the video. So we're gonna have to break down the transaction-based revenue. The other revenues aren't as important in my opinion, but the transaction-based revenues are basically the revenues they make based off of the trading on their platform. It is the majority of their revenues. As you guys can see, it was $720 million in 2020. All right, so here you guys can see the comparison in transaction-based revenues for the first 3 months of 2020 and 2021. So over here in this side you have 2021, and over here you have 2020. So as you guys can see, transaction-based revenues went up over almost 4x in the first 3 months of 2021 compared to the first 3 months of 2020. So that alone is, well, I don't want to say it's a risk. I just don't think it's sustainable growth. That's all I'm going to say. I'm not going to say that it's going to go down, but I don't think it is quite sustainable. So you guys can see right here, options transaction-based revenue. That is that first option. That is the first category right here. They have options, equities, cryptocurrencies, and other, and that gives them a total transaction-based revenue. Now the other category is not very significant, so we're basically only going to be looking at options, equities, and cryptocurrencies. You guys can see, so options right here in 2020, the first 3 months, they had about $60 million of revenue in that category. And then in 2021, it went up to about $198 million, so big jump in that one. Then we have equities, which is $31 million in the first 3 months of 2020, and then it goes to $133 million in 2021, which again, absolutely absurdly huge jump. Then we look at cryptocurrencies, which is the biggest curveball of them all, and that's about $4 million in 2020. So that was not too big at all, but it goes all the way up to $87 million in 2021. Now, if we look at the percentage of transaction-based revenue of total revenue, you guys can see that in 2020, 47% of total revenue came from options trading on their platform. So you guys have to know, if you're trading options on Robinhood, they're making money off of you, so they want you to trade those options. That's why it is pretty much the first thing they show to you when you're investing in a stock. Very, very dangerous, partly to the gamification of Robinhood, but that's a different video in and of itself. Then they had 25% of total revenue came from equity trading, and then 3% of total revenue came from cryptocurrencies. So in 2021, the first 3 months, that was 38% of options trading made up their total revenues, then 26% of stock trading, equity trading made up their total revenues, and then it goes all the way up to 17% of their total revenue came from cryptocurrencies. This brings me to the comparison of the years ended 2019 and 2020. So we're going to go back to the full year of revenue for Robinhood in 2019 and 2020, which is what we were originally looking at. So we're just going to be looking at the percentage of total revenue for the interest of time. As you guys can see, options trading was 40% in 2019 and then 46% in 2020. Equities trading was 18% in 2019 and 26% in 2020, and then cryptocurrencies was 4% in 2019, and then 3% in 2020. Now this is where it gets interesting. So you guys can see in the full year of 2020, only 3% of that transaction-based revenue was from cryptocurrency, but in the first 3 months of 2021, that was 18% of their total revenue. So this shows that cryptocurrency is actually a huge risk for Robinhood, and they even mentioned this in their risk factors section. You guys can see right here, a substantial portion of our recent growth in our net revenues earned from cryptocurrency transactions is attributable to transactions in Dogecoin. If demand for transactions in Dogecoin declines and is not replaced by demand in other cryptocurrencies available for trading on our platform, our business, financial condition, and results of operation could be adversely affected. So guys, we're gonna just look at the volume traded of Dogecoin. As you guys can see, this peaked around January of 2021 and then again in April of 2021, and ever since then it has died down. So I don't think that Robinhood can count on Dogecoin always having high volume of transactions, and I don't think that is a very strong source of revenue. I think it was a one-off type event. I'm not saying that in the future this won't happen again. Yes, cryptocurrencies are here to stay, and there's going to be high volume traded on Robinhood, and there are other industries that Robinhood can get into, such as NFTs, etc. So cryptocurrency is here to stay. So I think that there will be heavy cryptocurrency trading on Robinhood in the future, but it's not going to be a consistent source of revenue the same way that stocks and options trading will provide for Robinhood. So for that reason, I think using 2020 as an indicator of revenue will be much better, as it was only 3%, cryptocurrency was only 3% of the total revenue in 2020 rather than 18% in the first 3 months of 2021. So I just think that the revenue from 2020 just makes more sense when valuing Robinhood. So we're gonna take this 958 million, we're gonna round it up to 1 billion for the ease of simplicity, and you guys can see that the Robinhood market cap's around 58 billion. It's actually a little bit higher, it's around 62 billion right now, but we're just going to be using this number of 58.82 billion for the sake of this video, which would make the price to sales ratio about what the market cap is right now, which would be about a 59 price to sales ratio. Because if you divide $58.82 billion divided by $1 billion, which was their total revenue from 2020, you get about a 58. So ignore this value of 43 because it is a bit higher. Now, if we take that, we're gonna give it a modest price to sales estimate of about 55. And I think that a 20 price to sales is where you should be getting into Robinhood, maybe a 25 price to sales. So we are going to make our price prediction based off of a 20 and 25 price to sales estimate, which I think would be more of a fair value. 55 price to sales for this type of company, I think that's higher than Tesla. So I think there's a very, very good chance it could come back down to a 20 to 25 price to sales ratio. Anyways, we're going to take that. So 25 is the high estimate. We're going to do 25 divided by 55. And then we get about 0.454545. That is going to be what we multiply times the current share price. So you can see the current share price is 61.80. We multiply this times 61.80. Boom. That gives us a share price of about $28 per share, which I think is the fair value for Robinhood. Now, if we look at their chart right here, we can see that it IPO'd at around $38 per share. Then it sunk down to $35 per share. So in that situation, it might take a bit for it to get back down to $29 per share. And markets can stay irrational longer than you can remain solvent, so there's a very good possibility that it never gets down to that 25 price to sales target that we have of $29 per share. But if you do believe in Robinhood and you're willing to pay a premium for Robinhood, I think anything under $35 per share would be a decent entry price to get in, just to know that you aren't getting ripped off. Because using these current figures, guys, I do think that you are going to get ripped off. It's up 77%. It couldn't quite break this $70 price level. I mean, it went up above it a few times, but that was where it saw absolutely huge resistance. Now, we can also see based off of this technical analysis, again, technical analysis is not the best indicator, but it is currently going down below this 25 moving average, and if it does close below that 25 moving average, as you guys can see, it has not done that yet on this chart, but this current hour, it is trading below that 25 moving average, so that is definitely a risk if this hour does close below that 25 moving average, because it definitely has some more room to fall. It was rallied like absolute crazy. We're gonna do a quick Fibonacci retracement just to see where this thing could go. It's trading on the 50% Fibonacci level, and it definitely does have some more room to fall. As you guys can see, the MACD, it is currently going into a bearish pattern, and it usually does revert to at least the 0 MACD before going back up. So I do think there is definitely some more room to fall. I think we can see this at least hitting that 78.6% level before seeing some more buying pressure on Robinhood. So that would be at about $45 per share, which would represent about a 25% downside from the current price levels of around $60. Again, these are all estimates. It's not financial advice. However, I do believe at the current price levels, you should not be buying Robinhood. Don't give in to the euphoria. Don't give in to that meme hype that people are always talking about. Robinhood is currently one of the highest volume traded stocks on the entire stock market, which is not normal. The stock just IPO'd. It is catching media attention, and this is when you want to be fearful of a stock, in my opinion. It's already up over 70% on the week. Media is talking about it constantly. It's being constantly trading. I do think this has some more room to fall, especially with some insider selling going along with this stock. Guys, it's Robinhood. If you are a real ape, this is not a stock that you believe in, and I don't think we should give Robinhood the glory of becoming a meme stock, because you know they are profiting greatly off of the trading of hood stock. So anyways, guys, that's about it for the video. I hope you guys have enjoyed. I hope you guys learned something. We went over a lot of financials in this video, but we had to, as this company did just IPO, and we do believe that some of the revenue estimates in 2021 might be a bit sporadic compared to the estimates in 2020. 2020 is definitely a better indicator, but even in 2020, revenue grew greatly from 2019, and we don't know if every year is going to be exactly like 2020 and 2021, as the past year has been one of the greatest bull markets in history. So it's a great time for Robinhood to IPO, but it's going to be difficult for them to meet their expectations in the future. That is all I am saying. I'm not saying it's impossible, but I do think it is difficult. But regardless, we did value it based off of those 2020 numbers, and it is still overvalued based off of the 2020 numbers. So I definitely think in terms of a long-term investment, Robinhood is currently overvalued at these price levels. Anyways, guys, that's about it for the video. I hope you guys have enjoyed. I hope you guys learned something. And if you'd like to join that Discord, the links are below. And if you'd like up to $70 in free stock just for signing up, you can join Public, the better stock brokerage than Robinhood, also using those links below. Guys, that's about it. I hope you guys have enjoyed.